welcome to the CNBC TV 18 special, The Road to GST. I'm Shereen, Bhan. Now, the goods and services tax is going to be a reality perhaps on the 1st of April 2017. The constitutional amendment bill has been cleared by the Parliament, and now it boils down to the GST bill, which hopefully will be taken up in the winter session of Parliament, and that's where we will get a sense of what the rate structure will look like. What will the GST mean for business in India? What will the GST mean for consumers like you and me? What will it mean for small traders and small and medium enterprises? To answer all of those questions, CNBC TV 18, in association with the Ministry of Finance, will put together a series of programs that will explain what the GST means for the Indian economy. On this inaugural episode, joining us today is Najib, Shah, the chairman of the CBEC. Sir, appreciate you joining us here on CNBC TV 18. As I said, there's a lot of questions on what the GST will mean eventually as far as the end consumer is concerned, what it will mean for industry and so on and so forth. Let me ask you about the broad question. What happens now as far as the budget in itself is concerned? Because, that's what everybody used to wait for, to know what happens on the direct taxes side and on the indirect taxes side. Post the GST, that power really rests with the GST Council. So what happens to the budget? How meaningful is the budget going to be?
Well, like you rightly mentioned, the budgetary process as far as the direct taxes go and the customs part of the indirect taxes go will continue to be in place. What the GST does in effect is subsume other indirect taxes other than customs. So yes, let's wait and see how the budget itself will hold for this year. The GST Council obviously will be playing a key role in determining all the rates. So we'll wait and watch how this year goes.
So speaking of waiting and watching, sir, you've already put out the draft rules for the GST. In fact, there's been an early release of the draft rules in a bid to make sure that from the finance ministry side, you are prepared. And now it's a question of industry sort of falling in step. The next meeting of the GST Council is on the 30th. What continue to be the big issues that require the attention of the GST Council, and also take us through the issues that have been resolved by the GST Council so far? Where does that leave the negotiation?
The key issues which are addressed in the last GST Council meeting itself were threshold, until which you will have no tax, which was after a lot of debate and discussion determined to be at rupees 20 lakhs. The composition, which means that you pay a flat rate and you don't get through the rigors of having to maintain any records. You also don't get any input tax credit, but then it's a huge facilitation measure, and that has been determined to be at rupees 50 lakhs. We then had various discussions on how the compensation itself should go, which was inconclusive. We also had discussions about the sharing itself of the indirect taxes between the states and the center, and the roles which each administration will have to play. So a lot of ground was covered in the first meeting. It was a huge success in my opinion, because there was a lot of convergence on multiple issues. The meeting which has now been scheduled for 30th will obviously have to answer a lot more issues which are pending. We will have issues on exemptions, how do you treat exemptions itself in the days to come by. Rates, of course, is a big ticket item which will have to be discussed at some point of time. So there are a lot of issues which still require to be resolved. But yes, the road is very, very clear, and we should be in a position to resolve them.
I'll pick up on each of those issues in a second, sir, but let me start by asking you about compensation, because that's one of the key questions that's come into us. The fear in states is that this is going to lead to a loss of revenue. In fact, individual states have put out different figures. The state of Tamil Nadu, for instance, claims that it will lose almost about 9,000 crore rupees. But as part of the constitutional amendment bill, the government has guaranteed compensating states for 5 years. So you said that the discussion or the negotiation on compensation was inconclusive. But what should we understand in terms of the levers that will be exercised, or the calculations that will be made by both sides in order to arrive at the methodology and the formula?
Oh, well, these are all matters of detail which are still being discussed. As the government has committed, and as the Constitutional Amendment Act has put in place, there is a clear guarantee that the government will be compensating for the next 5 years. So that's something which will be completely honored, obviously. And what will be the extent of compensation are matters of detail which I would not like to get into at this point of time. Just let it be said that these are being examined very, very closely and in close coordination with the states themselves.
Okay. Let me then move to the other issue that you just spoke of, and you said that that is likely to be addressed in the next meeting of the GST Council. And this is a big demand from industry. What happens to exemptions? The finance minister has also made it very clear that, you will have to prune down significantly the list of exemptions, or you're just going to have to deal with a GST rate that will be unviable. In that scenario, what could the options really be as far as exemptions are concerned?
I think you should wait for 30th of September and see
what are the options on the table? I'm not asking you for a decision, but what are the options on the table?
Obviously, every exemption distorts the structure. On that, there is a complete agreement and consensus. The lesser the exemptions, the better. Having said that, everybody is aware of the fact that there are several exemptions which have this long gestation period which will continue to be there. So how do we address them? We could address them through multiple routes. We could address them by phasing them out over a period of time. We could address them by perhaps giving extra funds. I do not know. Those are decisions that the GST Council will be taking. And you'll get to know soon.
What would the preferred route be as far as the Ministry of Finance is concerned? I understand that the final decision will be one of the GST Councils. But for instance, on the issue of grandfathering, what is the, is the preferred view of the Ministry?
I'll be second guessing in this aspect if I were to make any mention of this. Suffice it to say that the GST Council will be briefed. The GST Council will be taking a call on this.
Okay. Let me then talk to you about the third issue that you mentioned, and that, of course, is the all-important one on rates. Again, it's up to the GST Council and the negotiation between the centre and the states. The centre has made it very clear that it would like the rate to be according to the recommendations made by the Subramaniam panel. That is what the Congress party has also suggested. States clearly would like something higher. How would you explain the rationale behind an 18% or a 19% or a 20% rate? I mean, to a consumer who's watching this program, explain to us the rate structure and what that would eventually mean as far as the viability of the GST itself is concerned.
Obviously, the rate is of key importance for all players in the entire scheme. What the governments, both the state and the centre, would expect ultimately is that the GST collects what it is collecting thus far. So a rate which gives you that amount is what everybody is looking at. What this also presupposes is that the lesser the number of exemptions, the better or lower the rate will be. Remember also that the GST, by its very definition, means subsuming multiple taxes, ensuring credit is given. So you're looking at the common man. We are looking at a situation where the tax on tax situation will no longer be there. That should help. That should help also in determination of the rates itself. So these are again matters of detail which subsequent meetings will unfold and show how exactly we arrive at a rate. But yes, this is of key importance for all players.
A lot of viewers writing into us, asking us, should we hold off purchasing a car because perhaps, car prices could come down very, very significantly. And I understand that it is premature to talk about what the price of a car will be on April 1, 2017 if the GST were to roll out on that date. But broadly, in your assessment, as far as manufactured goods are concerned, what could the implications really be in terms of reduction?
The complete flow of credit, which means whatever taxes have been paid on inputs at every stage, will now be available. It means that the tax on tax situation, which is there in most sectors, will reduce considerably. This, in effect, should mean again a reduction in prices. How this will all unfold, we'll have to wait and see. But yes, this is what we are expecting.
And you believe that it will be a significant reduction in prices?
I believe there will be a reduction in prices. How significant it will be, I do not know. But yes, there should be a reduction in prices. And that should be a matter of great relief for all concerned.
Since we're talking about rates and we're talking about prices, as per the recommendations of the Subramaniam panel, there is a demerit rate. And one can understand alcohol and cigarettes and so on and so forth. But the question then also becomes that, what qualifies as a luxury good? Would an SUV qualify as a luxury good? And hence the 40% tax rate there, bad news for consumers of those products. What would your response be?
To wait and see, because these are matters of detail again. what the Subramanian Committee report has indeed in effect told is that there should be a sort of a mean rate, and there are some items which can suffer a higher rate. These are the recommendations. And even now in the scheme of things, you have commodities which have a higher rate. Cigarettes, like you rightly mentioned, tobacco, for instance, higher end vehicles. So it is not as if they don't suffer a higher rate now. So perhaps that scheme will continue. The GST Council will debate and determine the rates itself for such commodities.
You know, here we were talking about how the prices of goods will come down once the GST were to roll out. But on the flip side, on the service tax front, we are going to see an increase. Explain to the consumer what that will mean.
You see, what the service tax rate would be in the GST regime, one should not speculate. Having said that, again, you have a situation where the credit itself will be available on the inputs which go in the delivery of a service. So we do believe that though the rate may be whatever it is, the flow of credit will be much more, and that should in effect mean a lesser final burden on the consumer.
So you're saying that that will in fact offset, let's assume that it were to be 18% at this point in time, but you're saying on account of the input credit,
yes,
we could see a certain amount of that being offset?
Yes, indeed. That's what I'm saying.